It's been another up and down week for SoFi. But is SoFi an unmissable bargain or an investor trap? We are told that Wall Street is betting against SoFi, but there is far more to this than meets the eye. I am more bullish than ever on SoFi stock, and in this video I will tell you why. When it comes to SoFi, everything is not quite what it seems. Wall Street is telling us one thing while they do something else altogether. This is a must-watch video for SoFi investors. Before we get into it, if you find any value in this video, can I ask you to smash the like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 400 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I'm not a financial advisor, and this is not financial advice, so always do your own due diligence. Now there's a lot to discuss, so let's get into it. First of all, what is SoFi and how is SoFi actually different from normal commercial banks? So SoFi is a fintech that offers a range of lending and wealth management services. The company primarily caters to early stage professionals and offers variable and fixed rate parent, personal, and MBA loans, mortgage refinancing, and more. They create modern financial products and services that help people borrow, save, spend, invest, and protect their money better so they can achieve financial independence and realize their ambitions, which could be owning a home or saving for retirement, paying off their student debt, and much more. So SoFi is a fintech company that is positioning itself as a one-stop shop for all your personal finances. Now, I see so many people commenting on SoFi, calling the company a startup and treating this like a company that was just founded. But SoFi was founded more than a decade ago in 2011, and a lot of people seem to be thinking that this company has only really existed since going public less than 4 years ago. But the fact is that this company was a decade old before it was listed on Nasdaq. It's still a growth company with huge potential and still at the very early stages and where you consider digital banking is at the moment. But this is not a risky startup that is only in its very, very beginning. This is well established. And fintech is one of the most promising megatrends which will disrupt the way we go about obtaining financial services. So considering the promising fintech industry's prospects, together with SoFi's strong execution, I think that the company is poised to become a notable player in the evolving banking industry. SoFi stock is considered by many as a strong buy because the stock looks deeply undervalued from the forward PE perspective and when compared with other fintech companies. So as I said a moment ago, if you've not been following the company over the past few months, you might think that the stock is dropping because the business is doing badly, but this is not the case. When we look at the latest investors presentation, this presents a very different picture of the company. In fact, this is a company that is doing extremely well with regards to almost every sector of the business. New member additions have increased every single quarter since the company first went public, and there is no sign of this trend slowing down. And new members has now increased to 8.1 million members. So too has new product additions, with this increasing at a rate of 38% year over year, up to 11.8 million. And if you consider the effect of year over year compound growth, you will see that just the last quarter alone there was an increase of 888,000, which is close to the entire full year 2020 growth rate. So in real terms, the company is now growing per quarter what it used to grow in an entire year. And as these numbers get bigger, so does their overall impact. But now this is very important. They have a lot of new members, and they have a lot of new products that they can provide to these members, which gives SoFi the opportunity to cross-sell its products, which has so many benefits. Like they can cross-sell products to existing customers. That means they achieve additional revenue without spending a cent in additional costs. So if you think about this from a financial point of view, in very simple terms, the revenue goes up while costs come down. This is exactly what you want to see in any business, not just in banking, not just in SoFi, but in any business where they can increase revenue while decreasing costs. They are onto a winner, which is why lending and financial service products are all up too. The company has posted their best returns to date. Again, this is exactly what I predicted in my earnings preview video. Financial service products going above 10.1 million and lending products increasing to 1.7 million. Now on the financial side, things are just as impressive, but this is where there seems to be some confusion amongst investors. SoFi's Q1
report has spooked some investors who had seen a drop in quarterly adjusted net revenue and quarterly adjusted EBITDA. And this did cause a bit of a panic when the earnings data was released because these figures had been growing every single quarter, but then Q1 seen a small pullback. So first of all, let's remember that SoFi had guided for between 550 and 560 million. So 581 was a huge beat, but because Q4 2023 had been so incredible, it makes it look bad. But now, it's not bad. As the saying goes, the trend is your friend, and SoFi is still very much on trend. And it's the same scenario too for the EBITDA. Q4 23 posted $181 million, and that was 85 million above the previous quarter, which was insane. That kind of quarter over quarter growth is not sustainable, as we all know, but the 144 million recorded in Q1 is still 50% above Q3 23, which is fantastic. As I said a moment ago, the trend is your friend, and this trend is still going upwards. And EBITDA margin of 25% is also the second best quarterly margin in over 2 years. Like going back 2 years ago, this was only $9. However, in the most recent quarter, we have 144 million. The numbers here are insane, and this is shown with SoFi posting back-to-back profitable quarters for the first time ever. SoFi has now turned that corner into a profitable company. But management has also guided for Q2, and again this was seen negatively because they have guided for between 555 and 565 million net revenue, which would of course again be a decrease. But it's important to remember that SoFi have never not beaten revenue guidance, and by quite a lot. This is what they do quarter after quarter. They guide on the lower end and then they absolutely smash expectations. Now it is far too early for me to be giving my expectations for Q2, but I will be shocked if I am sitting here in July and looking at anything less than 595 million for revenue and EBITDA of at least 151 million. Now, this is far above the EBITDA that SoFi have guided for, which is between 115 and 125. But there is a long way to go until July, and I will update more on this in the coming weeks. So if you want to see more SoFi updates, make sure you like and subscribe. As I always say, 400 likes shows me that you want to see more updates.
Anthony Noto has just acquired another 28,900 shares of SoFi Technology stock. CEO Anthony Noto acquired the shares of the firm stock in a transaction dated Thursday, 23rd of May. The stock was purchased at an average cost of $6.92 per share, with a total value of $199,000. So Anthony Noto now owns over 8 million shares in the company, valued at just over $55 million. Now you might be thinking that this is old news, but look at the date. This was only Thursday, May 23rd. At the beginning of the month, on May 3rd, the CEO also bought a similar amount of stock when he purchased 28,775 shares for nearly $200,000. So something that I always like to see is when management of a company are investing in the company. When you have a CEO buying stock, this tends to show that management really believe in the company, and it also aligns management's interests with the interests of ordinary shareholders. So it's great to see Anthony Noto acquiring these shares, as it shows he has more skin in the game now. The CEO is not the only one buying SoFi stock. Remember that this is a company that we are led to believe that Wall Street is betting against. Everywhere I look now, I see that Wall Street does not believe in SoFi, or at least that they don't see value in SoFi at the current price. But if that is the case, then I have to ask the question, why do they keep buying SoFi stock at this price? As we can see here, Norges Bank bought a new stake in SoFi Technologies during the fourth quarter worth $71 million. Sumitomo Trust Holdings boosted its stake in shares of SoFi by 176% during the first quarter and now own 10.7 million shares, valued at $78 million. But Nikko Asset Management America grew its holdings, Vanguard Group increased its stake, and Dimensional Fund Advisors bought a new position in SoFi. So this really does not look like the sort of thing that should be happening if they believe SoFi is overvalued. In fact, I would say this points more to the fact that SoFi is most probably undervalued. And this is further emphasized when we look at who SoFi's top shareholders are and what they are doing. Vanguard owns 82.8 million shares and added 1.36 million in Q1. BlackRock owns 41 million shares. They also added 1.3 million shares. Silver Lake Group, 31 million shares. State Street, 16 million shares. And Good Capital Management, 15.7 million shares. So, with the exception of Silver Lake, all of these companies have been adding to their SoFi position. While the story that we are led to believe is that Wall Street does not actually believe in this stock. So, what do you think? Is SoFi stock being manipulated and why? Does Wall Street really not believe in SoFi, or are they simply trying to push the price down in order to buy shares cheaper? Like, we've seen the data, they are certainly buying SoFi at this price, and the CEO himself is buying at this price. So, what's really going on? Let me know your thoughts, leave a comment down below. So, this is a very interesting SoFi stock analysis. The fintech powerhouse Wall Street is wrong about. So, it highlights here that all the latest news is positive, and despite beating quarterly earnings, shares in the fintech firm continue to slump. With 17.6% of the float sold short, Wall Street's smart money suggests downside risk for the stock, with shares more than reasonably priced and plenty suggesting that the bull case will prevail. Your best move with SoFi may be to go against the grain. So let's remember for a second that SoFi beat all analyst estimates in their latest earnings report. GAAP EPS came in at 2 cents versus forecasts calling for break even, and net revenue of 580 million also came in moderately ahead of the consensus estimate. Compared to the prior year's quarter, net revenue was up 26%, adjusted EBITDA was up 91%, and tangible book value was up 28%. And we've already talked about the increase in new memberships, products, and the fact that SoFi raised its full year guidance. So, with such solid results, why has the market maintained a bearish stance on SoFi technology stock? Well, there is a couple of factors at play here. For one, lending revenue fell for the first time in the quarter. But also, there seems to be an investor sentiment around every earnings report. Everyone seems to think that once they post a profit that the stock is going to skyrocket, and when it doesn't, there's a massive backlash and panic. Retail investors have set the bar for expectations so high now that even when SoFi smashed their own guidance, it still falls short of what retail is expecting. And this is a very dangerous scenario for retail investors. There is also the fact that SoFi stock is at 88 times forward earnings. But with exponential earnings growth likely, don't assume this forward multiple means SoFi is overvalued. A few years from now, SoFi's earnings could scale up to $1 per share, compared to SoFi's current $7 stock price. One analyst who does see the bigger picture is Mizuho's Dan Dolev, who has reiterated his $12 price target. In his latest research notes, Dolev has pointed out the recent sale of delinquent loans, plus the company's prudence when it comes to near-term lending growth, are encouraging signs for SoFi's ability to ride out potential economic downturn. Now, at the point of profitability, incremental revenue growth is poised to have an outsized impact on earnings. Sell-side forecasts call for EPS to nearly triple next year to 23 cents. The high-end 2025 forecasts call for an EPS of 36 cents. Macro issues could normalize by then, paving the way for a resurgence in lending growth. A spat of positive developments like these could send SoFi onwards and upwards to substantially higher prices.
But what do you think? In my opinion, there's a lot to be bullish about in both the short term and long term for SoFi investors. But this is, of course, just my opinion, not financial advice. Now, there's a lot of talk about SoFi stock on social media right now, and there has been for months. But always do your own due diligence. I might not be a financial advisor, but if you enjoyed this analysis, then please like and subscribe. When I get 400 likes and comments, I will do another SoFi update where I explain some of the little known facts about SoFi that will have a huge impact on the stock price. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next update. All links in